Okay, we are recording live training. This is for SpyBot Profit Finder and Profit Finder bars. Profit Finder is this green candles going up through here, and then the bars are down here. These are pretty easy. The webinar shouldn't be that long, but there are some tricks to it. And up here on the top, you see your candlesticks and so forth. Normally we have these candles in here. A lot of times you lose sight with the candles of knowing what it's going to do. So if I take this indicator off, let's see here, Profit Finder. If you look at that, it's sometimes confusing. Do I go short here? Do I go long? What's going on? So the Profit Finder bars, or the Profit Finder indicator, will kind of smooth it out a little bit. And then you can take your candlesticks off if you want. You can leave them on if you want, but when you get in here, it's kind of hard to see. But if you use the line will let you know where the price is. Like right now, our price is right there. So if you look at this real close, our price is right here. If you look over here, you'll see this little box as well that shows your price. But if you just put that there, it's there. One thing you can do is if you're going to use this, is you can turn it yellow. And that way it stands out to you and you know where it is, or you can leave it dim. But this is a very important part. Whenever this turns green, normally you have a spike. But if you watch this to come back down into the bars and get in here instead of right on that candle, you're going to have a better entry. It doesn't always work though. As you can see here, your better entry would be right here than up here. So it doesn't always work, but it works a good percentage of the time. Now the reason that you want this price line on here is if it starts coming down and coming back up into it, you're okay. But when you start crossing over it, these are going to turn back to green. So when you're trading it, you can see right here, we went over top of the red. And when we went over the red, right here's the first green one, which would be up here. So when you see that price coming back up into it, beware to go ahead and to get out of the trade at that point. Or if you've taken that two-step course that I put out, you're going to know how to draw your zones and stuff, and you're going to know a better, I'll call it a better guesstimate of where to get in and out. It'll actually help you. So when you have the zones in place, it really kind of lets you know ahead of time where you ought to get out. Like on this one here, we have a zone right here. Our price went up and it pulled back down in and just kept on going through. We wouldn't have got out to here. But if you're watching this right here and you're up in that zone, you'll make more money if you go ahead and as you watch that and it's going on up, just stay in it because you're green here. It may keep on going. But when you start seeing that pullback and come back into the green, you probably ought to go ahead and get out at that time. That will help you make more money than waiting on the price to come below the indicator in order to change the color. Now on this one, if we would have done that, let's say that we were waiting on what I said. So on this one right here, you would actually got in maybe right there. So if you got in there and you're watching it, if this line does not keep on going below, you would not even pay attention to that red. You would just stay into it and just keep on watching. And when this price line comes back down, starts coming back toward it, and if you don't know how to draw zones, that's you're not even going to know this is here. But when this is going up and this starts pulling back, maybe you get out right there and you made $415. So instead of making a long here, a short there, and a long, you just stay in one long. So your indicator is showing you, direction, long or short. But you're like right through here, you wouldn't even know what to do with candles. So let's turn this back to candle. You wouldn't even know to get in short or long here. And if you're looking back on it, you're probably looking, this is coming down, it's going to come up, and then it's going to short here. And you would normally just go ahead and hop into short, only to get stopped out and lose money. Well, if you're watching the line indicator, you're seeing that this is coming down. You might even get out right over in here. I mean, if it's going up, when it goes through it, you want out. But when it comes up into it, maybe you hold on to it. In this particular case, it was good to stay short. But let's take something we haven't even looked at. So right here, we don't even know where this is going. So we've been in a short the whole time. We turned green there, but our price is still down here. So if our price is still down here, we would just go ahead and stay in the short. If you have the profit finder bars, I'm going to go over this real quick. If you're on a 144 tick, which is what we are on now, if you're trading a 144, you want your profit bars to be 2 under and 2 over. So right here would be 50, 100, 300, and 400. So you would want to change that to where your 144 is in the middle of all of these. So if you're trading a 1 minute, maybe you drop down to like a 100 and a 200 tick and do a 1 minute, and maybe you do a 5 minute and a 15 minute. So your choices are up to you all, what you all want to do. But let's just go ahead and take this one screen at a time. So we're kind of watching right here. Can y'all see that okay? Make it a little bigger.
Yeah.
And then we're just going to keep on going with it. Okay, so each one of these is price bar. So we're glad that we stayed in the short here now. So this red is telling us to stay short. So you keep on coming. Maybe you've made enough money at this point. You just want out and take your money. Or right there, you're starting to pull back. So now it's pulling back. So let's see where it goes. Right there, now we're in it. So at this point, you have to think, we have this. It kind of pulled a little bit of a curve right here, and now this is coming down. If our wicks are on the bottom and not on the top, that's a good sign that we are just going to keep on selling off. When you come up here, see how the wicks are starting to come across the top? That's a sign of consolidation. So when you see wicks on top of your red, that's a good sign that there's a chance of reversal. So when you have a real tall wick on top, it's going to be a big sign. When you don't have any, that's a good sign it's just going to keep on dropping. So let's watch this next one. So we went up. No wick there, right? There's no wick. No wick. There, it went across though. So right there, you see the bodies are really big here. I'm going to make it even bigger for you. The bodies are big here, and they're smaller right here. When those bodies start getting smaller, that's an indication that you are coming back up. When the bodies are big, that's an indication that's going to be still dropping. But look back here at your bar. Let's go back one tick. We have a green right here. When we have that green pop up, that's a good indication that it is reversing. So on the 50 tick, it's already turned green. These candles here, it's already turned green. So that's a good indication that it's going to reverse. You look back through here, there's no green, except for right here. But if you have more red than green, you might as well stay in. So let's go ahead and go back to this one. See what it does. Now you're not always going to get the very bottom, and you're not always going to get the very top. You're trying to get in between. That's what you're trying to do. So that one popped up. So we went from right here, which is 46 to 52. So there's 6 points that we gave up. That's $120. Now we're coming back, but we look at our wick. We got a wick on this candle now, and now we've got 2 green. To me, that says you probably ought to get out because we're curling over. We've got 2 greens, and we've got a wick on top. When you have that wick on top, that is a sign of either consolidation or reversal, one of the two. Now, if you look back at it, you had this whole short right here. So you were probably in it. Let's see, you would have got out there. You probably got in right on through here. So let's look how much money that would be. So let's say you waited on that line to come back up in it, and then you hopped in. And let's just say that you were watching this down here. You still had 2 reds. Red, red, a little bit of green in there, but it's still always coming back red. So you go ahead and stayed in. So at that point, if you got out at that spot, that's $1,025. That's double what you paid for the indicator, almost triple. So you've got
That's a mini, right?
yes, that's a mini. So if it was
Okay.
a micro, it'd be 102.50. That's still good money. So now we're going to go ahead and go back and we're going to look at this and we're going to move this to exactly where we would have got out. Would you have got out here? You know, as far as, I mean, you don't really see it. Let's go back. When it comes down to right here, would you have gotten out right in here? I mean, that would put you at that one $1,105. Are you going to be greedy and keep on going, or are you going to go ahead and take your profit? And that's what only you can decide this. So let's just say that we held this up. We've only got one green one there. We have some green there. We think, well, it might keep on going. If you have the two-step course, you're going to know where your zone is. So you're going to know a lot better just by that course because it shows you how to draw them. So we're going up, and now we're thinking, okay, we're coming back down. Now we got a green one. We definitely would be out right there. Actually, it would be right there because when that turned green, this one was here. So there's $1,005. Let's just say that you were a superhero and you knew exactly where the bottom was. There's 1260. There's no way in the world you had ever got that. It'd been pure luck if you did. So there's another $260 roughly that you could have made. But when you're coming down this far, and then you start seeing it come back up, maybe you get out, maybe you don't. You definitely would have got out. When you start seeing this crossing over, that's a good indication you probably ought to get out. But look right here, it did the same thing. You know, there's no wicks on top. Then we had a wick, then we had a green, but our price is still coming down. So what we could do is go ahead and bring our stop down to this point, and if it goes ahead and bounces up, it'll hit the stop and knock you out. So that's what you can do down here as well. When this come up and then it come down, you can bring your stop, say to right there along the top of this peak. Bring your stop to there, and then when that turned green, exit out. Just go ahead and bring your profit target up if you haven't already. So when you look at this, you want to look. There's indications on these candles of what to do, and I really think you ought to have your price line up to understand where your price actually is, because if you don't have it on, all you see is here, and you'll see this right over here just going up and down. It may be down here on this one, and you think, well, shoot, if I'd have known that, I'd taken my profit. So when this is coming down and you have no wicks on top, just like this right here, there's no wicks, but you can see it starting to curl. These are smaller bodies than these. When they're smaller bodies, that is a good indication that you're starting to crunch a little bit and starting to consolidate. And then when you saw this wick over top, that's because it was way up here. And then it turned green. So when you start seeing these starting to turn and that price come up and then it come down and then it come again, that's a real good indication it's going to blow through. So at that point, take your profit. You've got the green here. You've got the two leg here. And most people know how to trade a two leg. So you've got the first leg, pulls back, and then another leg. So when you have that, you're better off to go ahead and get out. So let's take another one. Any questions on that before I move on to another one?
Got a little question. You're talking about like how the bars you put your 144 tick in between in the middle of two on top, two on bottom,
Right.
roughly. And that works for, like, say you do a 1 minute or a 5 minute or whatever. You switch everything over to minutes.
Tell me a chart that you want to
do. Oh, I don't care. Just pick one.
All right. Say we have a 5-minute chart. Okay. So if we have a 5-minute chart, then we're going to come down here and we're going to change this to a minute. And we're going to make this a 1 minute. Then we're going to change that to a minute. And you can change it to tick. You don't have to use a minute. So, I mean, it's whatever you want to do. But let's say you do a 3 minute. And then you want to go ahead and change this one to a minute. And maybe you do this one a 10-minute, or even a 15. Actually, you could do a 15, and then you could change this one to maybe a 30. I mean, if you're trading that kind of time frame, then you know, 5-minute, then those are good time frames you could use. A 30-minute, you can see it's pretty well bearish the whole day. You know, at this time, I don't even know what day this is, but it's actually it's right now. So this one shows, if we go back, this one shows that we were pretty much bearish the majority of the time on the longer time frame. And then right here, it shows that we have a lot of green. So let's take this one and analyze it a little bit. Let's just do this one because we're mostly bearish, and then we're starting to turn here. You can see the price line is crossing over here. We've got a green here. If you've got 2 greens and then this one's a green, that's 3 out of 5. 3 out of 5 is pretty good odds it's going to keep on going. If you have 1 green and maybe a green here and the rest are red, not so good about going long. But when you have 3 of the 5 in the same direction, then you're pretty, you know, it's going to be pretty good chance you're going to be going long. So let's look at this one and analyze it. So we had a green candle here. We're looking down here. We're already prepared for it to turn green because we see this one, and this is coming up into your profit finder. So when your price is coming up into it and you have your green here, that's a good indication you're going up, right? So that's 2 out of 5. When this one hit, actually that would be 1 out of 5 because it's still red. So it's not one that you want to take long yet. And then when you have 2, which would be right here, now you've got 2 out of 5. Again, 2 out of 5 is not that good. Right here you have 3 out of 5. If you have 3 out of 5, take the long. That's really good odds. And that's, you know, looking at a 1 minute, a 3 minute, or lower time frames, and now you've got a 5 minute. All of them are saying long, so hop in. So you would be getting in right there. Actually, let me do it this way. You'd get in probably right there on that line. And then as it goes up, and it just keeps on going, now you got another green one down here. So now you're feeling really comfortable with it. All your wicks off the bottom are starting to disappear. Right there is your first one with no wicks underneath, so you feel real good about just staying long. So right there, you're at $680 profit there, 68 with the micro. And then as this keeps on going and going up, and then you start seeing the price start doing this, maybe you get out right in there. Maybe you got out right here. There's $1,570, one contract, 157 micro. That's good money, guys. So then you start seeing that these candles are starting to pull over. So if you come back over to look at this way, you've got 3 bars. You've got one here, that's 4 bars that are actually going green. So we keep on coming over. We see this price coming down, you know, and it's kind of going across. When you make a high and then you make a lower high, that's a good indication to get out. You notice on here, you didn't have any of those. You made a high, you pull back, you made another high, you pull back a little bit, you keep on going. If you keep making higher highs, you're better off to stay in. But as soon as you make that next lower high, that's a good indication to go ahead and get out. So maybe when that hit there and it pulled back to there, see, that would be 37.25. This is 31. So you wouldn't have moved that far. You could have gotten out probably around 35. When that made that low high and pulled back, that would be a good indication to get out. But you're looking at this and you're thinking, well, I don't want to lose more in case this will come down and go up. You can stay in. I'm just trying to show you how to make more money. Now it's starting to come up and you're thinking, well, I shouldn't have got out. We still have our candles that are actually starting to curl over now if you look at them. So when you're coming up, they're still big, but they are starting to curl back. And you can actually draw a trend line off of these. So like if you come off that bottom corner and draw that. Now, if we come over to the next one, we're staying on the trend. I should have done a ray. Let me do a ray. There we go. So we got a ray. A ray will go indefinitely, so you don't have to keep on doing it. So now we're going to go one more. Now we're starting to break through that ray. So these went up, they pulled away, now they're coming back into it. So you can chart out these to see when you start seeing that curve. And that's not hard. You all know how to draw this right here. That's easy. So you're not charting out candles or none of that. You're just looking to see how this is going. When it starts pulling over, that's a good indication it's coming over. So let's say you stayed in it and you got out right there. That's still 1580. It's still about the same money. So now we've got one corner coming through. Can you all see that okay? That corner?
Yeah.
So now we'll go one more. Now we got more. We definitely ought to be getting out now because this is actually coming through. So now we're starting to curl over. And we see our price is actually making lower highs all the way. In my opinion, I would have definitely been out on the third low high. Maybe I stayed in there and hoping that it would pull back and then take off. But I definitely would have been out right here. This trend, when you're looking at that ray, is telling you that. You've got red and you've got red down here. So now you've got 3 reds, or actually 2 reds and 3 green. But we've got this ray coming up through there that is showing us that it's coming through. So let's go to the next one. Another one. So there's the first one, second one, third one. So let's draw some arrows on here. You got one right there. You got one right there. And you got one right there. So those are the 3 arrows where this trend line is starting to come back and pull away. Now what you want to do is try to get here on the bottom of these, because if it keeps on going up, these candles are going to start going away. You just want to try to find out when is it coming back to this ray. That's what you're looking for. So now we're going to go one more. So we're right there. Now we're starting to go sideways. Now this one right here, this is almost a double top candle. That's telling you it's going to come down. We've still got the one red, and we've got 3 greens. We've got 2 there and 1 here. So it's still good to go. Now, our price has come back into the candle. So we have all of this coming. So now we have a 4th one there. And we have that one there. So now we've got all of these candles that are coming underneath this ray. That is a good indication to go ahead and get out. You should have been out really back in here because you're watching these candles come right back to it. Why give up money? So on that one, worst case, around $1,600. If you'd have waited till now you're down to $1,295. Now I know that you and everybody else watches their P&L. When it's on target, they're looking at the money. If you see 1,600 and then you see 1,400, you think, well, if it gets back up to 16, I'm going to take it. And then it's 13, then it's 12, then it's 11. If it gets back to 14, I'll take it. You'll take what you can get. The market don't care that you want to get it back up here. So you can see the line tool coming down toward it. So when you see this line tool coming to it, back up in here would be a good place to get out. So now you have a red, and 3 greens. So now let's see what happens. Now that price is underneath here, we didn't get out. So now we're at $11.95. Take one more. And then we're going to go ahead and make some more arrows here. Now we've got a wick underneath it. And actually, if you look real close, there is a wick right there. I don't know if you can see that or not, but there's a wick underneath that. And then there's a wick here. All signs that it's what? Going to start either consolidating or pull them back. So let's go ahead and take another one and see what happens. Now we've got a red. Now, if you would have done this based on that, that didn't turn red until this right here. So now you're at 11.25. Still a lot of money. I mean, that's making good money, even 112.50 on a micro. But you could have had right here would have been the perfect place because you made a lower high here, and you're thinking, well, it's going to pull back and then break through. Then we made our second lower high. So with our second lower high, that's a good indication it's going to keep on coming back. There's $500 from right here to right here on one contract. See how that works?
Yeah,
So
that
now,
makes sense.
Yeah, now we've got 2 red, 3 red, 4 red. So that's a short to me, isn't it you? So would you take a short here?
Not yet.
Okay, what would you be looking for?
Well, that's right on the line still. Would we not want it to get underneath the price line? Is that what you called it, the yellow line?
The yellow line is the price, and it's actually under the red. But usually what will happen is when it comes down, it will come right back up into that candle. So let's see what happens. It don't do it every time, but it usually does. So there it dropped a lot more, and we're thinking, I should have got in up there. I'm going to get in now. Watch it pull up in there. There it goes. It's coming back up. And then when it went back up in there, it's usually 3 to 4 candles in, it will pull back up in there. I made a bot for this, and I'm actually doing some testing on it before I release it. But the bot has a way where you can pick how many candles that you want to get in, and also how many candles before you want to get out. So getting out, you always want to get out on the first candle. But getting in, I think it's either the second or third candle that seems like the bot works better. So I'm working on that. So right now, we're down here. We could have got in back here and still been fine, and maybe it pulled back and we had some more drawdown. But usually that thing will actually pull back up into the candle. In this case, it never did it. It went back up here and then it dropped again. So we lost. If we'd got in right at that candle, which would have been right here, and if we had waited to there, that's $40, which isn't much. And then if we waited down to here, that's $270. So it's really kind of a choice of what you want to do. Rather get in on that first one or not. If you can afford the drawdown, it's usually better to go ahead and get in there, which would have been right here. But a lot of times it will pull back up in there. Where this thing pulled down and then come right back up in it and then drop. I mean, you can see that this line is coming down. That's the trend right there. So maybe you got in a short up here and just put your stop right there, preparing for this because we have our wick there, we have a wick here, and then we went red. So that's going to be a matter of playing with the indicator to see what works best for you. On a 5-minute time frame, you're going to have a lot more variance in money and drawdown than you are on, say, a 144 tick. So a 5-minute is going to be like one trade and you're done for the day, kind of. Maybe a couple of trades. The 144, you're going to be able to scalp it quite a bit and possibly make a lot more money if you're trading it right. So now let's go one more. Do what?
Have you ever made a video about drawdown explaining how that works?
Well, through a bunch of our courses and everything, I talk about drawdown all the time.
Okay, so it's just pretty much when it goes the wrong direction on you, it eats up a little bit of more commission until it corrects itself, or it goes the way you want it to.
Not commission, but it takes away your bank account. So let's say you got in. Let's say you got in a short. Let's say this is not a good example. Let's say you got in a short right here, and you had your stop there. So you've got $165 of drawdown right there because you got in right here, and let's say you had it right up here at the top of that peak. That's $165. So if you had a $1,000 in your account and you got in this trade, you would now have $835. So I think it's. Hey Jim, I muted you. If you wanted to say something, you can click on that chat. There was background noise. Or if you want to unmute yourself, I'll unmute you. If you mute yourself, I'll just go mute you. So drawdown is going to be from where you got in and then when it goes against you. So in this case, it started going back up and you're in short, so you're down $165 right there. And that's your drawdown.
Okay.
So now, depending on where you got in the short, let's just say you played it by the book and you got in right here when it turned red. Okay, let's just say that. So now we're going to go ahead and come in. And now we're looking at our candles. We've got bigger bodies here. We've got small bodies, a lot of wick. When we're thin like this, that is iffy. But now we've got a bigger body. That is a good sign that it's going in your favor. So you come through. You're still making bigger ones. Now you got 4 red here, and you got 1 there. So 5 red is like golden. That's what you want. So you're going to stay in this short. Now it's pulling back a little bit, but you're still red. Pulling back. Now we're up in it. We've got 2 greens down here, and we've got price right there. What do you do? At the bottom of this, you've got $605. What would you do here?
I'd get out.
So right there, you would make $195. But you had 600 down here. But when this price is coming back up, if we go back 1, there's 2 green here. So that's a good indication that you may be coming back. So right there is going to be $280. You did have 580. And then it's a matter of in 5 minutes time, you went from 580 to 280. There's $300 that you're going down. When you're trading a 5 minute, your drawdown is going to be larger than a small one because your candles are not going to be the candles are going to be a longer time span between them. So right here you would have got out. Actually, I think you were over here 1. You would get out right here. Is that what
For
you
sure.
said?
Yeah, for sure.
Okay, so you're $185. Still a lot of money, right? Still good money. So we've got 2 green, but we've got 3 reds. And then we come back down, and you're thinking, I shouldn't have sold it there. That's our main thing. But we've still got 3 red. 3 red is short. If we had 3 greens, you get out. So you're coming down. Our wicks, if you look at this, we are now starting to come back up on that. So let's go ahead and take this one from, say, right here. So we've got all of these are topping right there. And then we start coming out of it. But we're still red. We still have bodies. And we still have 3 red. Prices come down. So now we're back to 4 red. 2 red, 1, and 4. So there's 4 red.
That's wrong again.
Well, that's why that's why the bars are important with this, because it gives you a larger time frame to look at. I like these on any chart, even like just a regular candlestick. I like these.
So if the body, if it's got a wick on top and bottom, that's pretty much showing consolidation.
Somewhat
but if
consolidation.
But if the bodies are getting larger, then the strength is going with, like, those will be going down.
Right. See, this one's got a smaller body than that one. You see, they're both on the same bottom, but on the top it's just a little bit different. So when you're bigger and then you go smaller, that's a good indication that you're losing your strength. It's going to be going the opposite way, possibly. But look here,
Okay.
this body right here is a little bit bigger than that, just barely. And this one's bigger than that, and this one, and they just keep on going. Your wick on the bottom is a lot more than the top. And what you want is you want the wick to disappear on this top in a short. So the wick down on the bottom isn't as important as the wick on the top when you're going into short. So let's go one more. We're 5 red. I say you just, hold on because we're going to make a bunch of money. And we're still 5 red. Still 5 red. The wicks are getting smaller on the top, aren't they?
Yes.
So if they're getting smaller, that's good. Down here don't matter as much as up here. So now let's go ahead and go. Now we just got a smaller wick. Now we're coming way down. We're still 5 red. I'm going to be holding on.
I'd be cussing myself because I got out back then.
Right. And see, right now, you would be at $1,480 instead of $195, I think it was. And it's just a matter of watching these wicks and stuff to know what they represent and how to trade it, especially using the bar. I think the bar is more important than this indicator. I would rather trade off this bar than the indicator itself. I like it better. So now we have no wicks. So we are good to go for quite a while now, right? It looks like, we got in right there, which was the entry. And we come on down. Right here, of course, this is cheating, but this is a resistance level. If I was trading this, I would be thinking about there, and I'd be watching, thinking about there, watching, and then it keeps on going. But when it got here and bounced out, me personally, I would be thinking about going ahead and taking out there. The difference between there's $13.45 and it come down to $15.05. There's only $100 difference. I still have a lot of profit here to keep. So we're still 5 red. So let's see what happens. We come up. Now we're breaking through this one. I'm thinking, well, we're probably going to come back up there. I'm thinking that I go ahead and get out. Now the bars all show 5 red. Our ray, it's actually coming back down underneath. We still have no wicks there. Good indication to stay in the trade. We come up. This bar is still lower than that one. That's a good sign. Still 5 red. 5 red. Now we come back down. If I'd got out up here, I'd be upset. So 5 red said stay in the short. Now we got a green one. Now we need to start thinking because our 1 minute is now reversing and coming up. So at that point, I probably, based on having these support and resistance lines here and stuff, and that coming down and making a higher low than here, see it? So when you have a higher low, now you're thinking, I probably ought to go ahead and get out because we never made that lower low there. And we've got this green. So I'm getting out. That's what I'm going to do. So let's see what happens. We come up. I'm thinking, yeah, I'm glad I got out there. Oh, man, it's coming back now. Look at this. Now we got 5 red. Look at that drop. But I made $1,225 on it. Now, if you didn't have these resistance lines in here, maybe you would have stayed in it because price never came up into the candle. No one is perfect about getting in or out of a trade. We have a wick on top here. We have a wick on top there. So that is a sign that it's come across, and our price is actually in a zone right here. So if you look at our price, we are in that zone right there, but we broke out of it. So now let's go ahead and bring this over. And let me take that out. So we're 5 red. We blew through all this. Now we're coming back a little bit. We're still all 5 red. Right now we are $1,690 to the good on that trade. So let's go ahead and go down. Now we've got another green one. and we've coming back up. So if you were on this one, there's $1,850. I mean, it'd be hard not to take $1,800. I mean, it really would, especially per contract. That's almost $8,000 for 4 contracts. So now you're back up here. Our candles are still below the ray that we had, so they're down. We have no wicks. We've got 4 reds. I tell you what, I would just go ahead and probably hold on to it and see what happens. You may go ahead and come back up in there. It may come on down. What's the next one? So 5 minutes later, we're back up inside it. We've got a green going all the way across on the 1 minute, and now it's coming up. So now we're at 1265 where we could have been at 1845. I mean, that's a big difference to not take the profit. Another thing you can do is you can kind of scalp this trend to where if it starts pulling up to it, you can get out, and when it gets back up there, you can just hop in another short. So that's another thing you could do. But if you're playing this off the bars, whoever's got the most collars wins. Right now we're 4-1. We got 3 red, and then this is our 4th, and we got 1 green. We're still there. Still there. Now we're coming down, but look at our candles here. We got little wicks on top, and it's kind of going sideways now. So probably a good indication to get out, but now we're back to 5 red. So let's hold on to it. And we're coming back down, come back up. Now we have 2 more greens here. 1 green bar, the 1 minute. This is, the 1 minute is trying to go back up. So what would you do here? Nothing?
The Reds have it, but it's above the ray. I don't know, man. My stomach could say get on out, but
yeah,
it might not be the right choice.
I mean, you've got a zone going on right here. It's just going sideways, really. Even though the bars are coming down, your price is going sideways. So maybe it goes up here all the way, or maybe it goes ahead and comes back down. So let's see what happens. We pop through. Now our price is above the red. It's not into it, it's above. So if we would have went ahead and took price there, took it out, that's $12.95. And you were up at the most, which you wouldn't have got this, but $18.35. So let's see what happens in the next one. We come back down. We still got our wicks are up here. Our bodies are smaller. We're still in the consolidation period. Now we got a big wick here off the bottom. That's the same there. It's pushing up, okay? So we got our big wick up here too, or not down here, but up here. So this wick is not dropping. Now we've got 5 red though.
It's a double top, isn't it? Or is it off a little bit?
Not really double top. I mean, these 2 right here, these candles don't really necessarily double top like what we think. They're just kind of a trend candle. It's a Hashiaski. How you say that?
Bless you.
Yeah.
I don't know.
Hashiaski. I never can say it right. So they work off of those candles. So when this is going sideways like that, this one is a little bit lower than the other one, just barely. But now we're back to 5 red. Me personally, I'd stay in. So now we're 1 green and 4 red. It's still going in this consolidation period, but we're still red up here, and we're red on 3 more. So you stay in. Now you're coming back up. You can see the bottoms here are just staying there. Now we've got 2 green. I tell you what, at the most, I think I would definitely be getting out here because these are curling up. You can see the curl. You've got the wicks on top. You've got 2 green here. To me, that's a good sign to get out. I mean, the best thing to do is when this comes down, starts coming back toward it, if you're up that much, just get out. When it goes up, you can always hop back in. Even if you hop in down here, if the candles start coming down and it drops really good, you can still hop in again down here because you made a lot of money to cover your drawdown. So right now, I would be getting out for sure because we have 2 green. That is a good sign that we've got our 1 minute and a 3 minute is turning up. We can see the price going up. So now we're going up. So if we hadn't have, we would be all the way up here to 1,005, and we were all the way at 1830. So that's a big disappointment, right? So we've got 2 green and 3 red. That'll probably, it usually comes back down into it. So let's see what happens. Now we've got a real small body. We've got 2 greens. Now we've got 3 greens. So at this point, do you hop in alone?
No.
You wait for another candle? You know, we definitely got out. If at the worst case, we got out right here. That's 11:30. At the worst case, if we followed that candle, that's where we would be, right? But if you start watching this, I mean, you can see the 1 minute's trying to turn here, and then it turns here, and it pretty much stays almost solid green all the way across. You had a couple little reds, but it pretty much stayed green. So now, you would not get in alone right here, right?
I would not.
Okay. So now would you? You got
Tempting.
3 greens.
Yeah, I'll say yes.
Okay. I agree with you. I think right here, you know, we kept making, I mean, honestly, if you start watching this price line, you might have got in right in through here. You know, maybe you got out on your short over here and you're watching this price line. It come through, come up, and now that it's making these higher lows, maybe you got in back in here just trying to beat it, you know. So now let's see what happens. So let's take, we're going to say we got in right here, just so we can mark it. All right, so we pull back down in. So from there, from there until here, now we're $150 drawdown. Oh man, we got stopped out.
Don't follow me.
So let's go back. One thing I didn't look at. Before we even got there, we're already back to 5 red. We got 4 here. Oh, I know we got 4 red and 1 green. We always follow the majority. The majority is the 4, which is red. So this is the part that kind of gets you. I mean, me personally, when I start seeing price going right through here, and we've had that big drop that we had. I mean, if you look back, look at this big drop. Now, you're going to be looking at it. You're going to be looking at it like this. And you're going to see that we're making a lower low than what we did over here. But, yeah, more than likely, you're thinking this is probably going to come back up in here somewhere or maybe even further. So let's go ahead and look back at it. We've got 4 red, 1 green. You always go with the most collar. And there you are. Now you still got a green up here. We still got a green. I'm surprised, actually. I think it'd be red by now. But we've got a green with a larger body. Now we've got the red. So we lost on the long. It's not going to be perfect, but we lost on the long. But if we have the bars and we're looking at the bars and it's all 4, we would have probably gotten stopped out there. Even though this one was green, we have these 4 red. We go ahead and hop back in the short and just let it go because we're really trading the majority. So when you have these bars, and if you don't have the bars and you only have the indicator, you can't even look at this. You don't know what's going on. But this is why the bars are so important, either with this indicator or just a regular trading, because you can see what the majority's doing. You can see 5 charts on one chart. Now, would you get in this short with this 1 red right here? That gives you 5 red. Would you hop in the short now?
I've been burned before, but
You saying yes or no? I would not at this point because it's dropped too far. You know, the price is way down here, so I would wait because this will probably pull back up in there. If it doesn't, I'll just miss the trade. So we dropped again. You know, looking back on it, right here's where all of our reds are. So more than likely you'll be getting in a short right there anyway on this candle right here. So probably about right there is where you would have been in if you had followed correctly. So let's just say that we're here, and let's say that we got in right there based on the collars. So you're up $980 at this point. So let's go ahead and go back. Now we're coming back up. We're still 5 red. You stay in. Now you got 1 green. Would you be thinking about getting out, or would you stay in? Right now you're up $475. Me personally, I would stay in because majority wins. You got 4 red, 1 green. Now we got 5 red. And then 4. And it keeps on going up. Our candles are coming down into it. Now our price is up inside it. And now, we were all the way down here. We were at $995. Now we're $275. It's hard not to take $985, especially when it starts coming up and you see 7, and you're thinking, I'll just take it. I can always get back in. So right there's our price. We're 5 red. I would not be taking the exit right there for sure because we're 5 red. And then we drop. These bars are very important to go 2 smaller time frame and 2 larger time frame. We come back. Now we're still 5 red. Now we're 1 green. We were down here to 1465. Now we're back to 765. It's hard not to take those profits. So right now we're still saying short. Now we got 2 greens and 3 reds. That's when you start deciding, the percentage is not all with you, right? I mean, you're looking not as favorable as what you were. So now you're thinking, do I stay in or not? We've got 3 reds and 2 greens. I probably, when we got down here, I probably would have been taking profits and rolling through there, especially when this green popped up. So that would have been actually, I think the green was right there. Yeah, there's the green. So when we got that green candle and it's coming up, but you're watching this price. I mean, it's volatile in here. What you're trying to do is take the majority. So there's your 3 red. Now you got 3 red, 2 green. Now you've got 3 red, 2 green. Now you got 4.
Jeez.
See what would have happened there? Of course, your stop would have got you. You would have trailed your stop down with that. But right there is 745 in the hole that you would have lost if you didn't have a stop, which you would. Now, one thing I didn't mention about the stop, and I should have earlier, is let's take this one, and I'm just going to make it a yellow just so you can see it. As you come down, you can put your stop right across the top of these wicks as it keeps coming down. You don't want to put it at the bottom because it'll sometimes get you stopped out too soon. But you could. I mean, you could put it on the bottom. Just say, as this is coming down, if it starts coming up into these candles, I want out. You can always hop back in. And if you would have got stopped out right there. So if you would have taken that, you would have got stopped out right there. That's $410. Nothing to sneeze at. So you would have actually gotten stopped out there. Now on the tops, you would have gotten stopped out there, and then you would have made $195. On this one over here, if you would have went back, let's see here. Yeah, I'll look at that. On this one, if you put it on the bottom, you would have got stopped out there. But if you're on the top, you would not have got stopped out. So putting them along the top is really good. As you get a new candle, just put it right there on the top of it. So when this one closes and this one opens, put your stop right there. And that way you can just kind of walk it down. If you walk it down, then you're over the long run, you're going to make more money. So now we're going to go to right here. we're 3 red, 2 green, and we're going back. Actually, before I go back to there, I mean, you've already seen it, so it doesn't matter. But we have green candles here. We got 3 green and 2 red. At this point, do you hop in the trade or not? It looks like it's going up. Based on statistics, you would, right? So when you look back on it, we went up, we pulled down, and now we're hopping green. To me, that looks like a long. But I think I would have been long, either long or maybe thinking about it way before there, because we had this trend going through our zone. So with this zone going through, we're watching this price, we're drawing that zone. This is coming down in it, and we're just kind of going back and forth. If we had our stop on the bottom, we'd be out right here. Actually, we've been out there and then had to get back in. But if we had it on the bottom, we'd be out there. If we had it on the top, that might have got it right there. That might have gotten you out. Depends on where the stop was set. So now you're looking for a possible long whenever you get stopped out. And then when that starts coming down, you got to think these are 5-minute bars. There's 5, 10, 15, 20 minutes before it come back up. When you see it making the higher lows, you got a low here, a higher low, and a higher low. That's a good indication that it's going to start going up. So sometimes you can beat these candles before they turn green, especially when you start seeing the green down here. Right here would probably be where you'd want to maybe think about going ahead and getting in long, because you're looking at the bars down here.
And it's got a pretty strong resistance right there.
Yes. So when you start seeing these candles start coming around and you start getting the wicks on top, when those wicks start popping on top, that's a reversal sign. It's either consolidation or reversal, or both, because usually you'll have consolidation before reversing. So that's a good sign that maybe I want out. This one right here, you had 2 wicks right there, a smaller one there. So you don't have to get out on the first wick, just kind of watch it. And as long as you have your price line up there, it helps you. So right here, I think personally, I might have got in back in here. That's personally. And that's because, actually it would have been on this candle here. Because you have 2 green ones, and this is actually showing a sign of reversal. We're making higher lows. So I'm thinking that I probably would have got in about right here. So if I did that, so let's just put this up here just to see it. Now we're going to go one more. So right there, I am still good. I am $45 to the good. I feel okay with that. My stop is going to be, right here on the bottom of these. So right there is my stop. So let me find that. Where'd that thing go, that line? I must have deleted it. So my stop is going to be right on the bottom of this candle. And we got stopped out there. So on this one, we would have lost $135. But that's okay. We made, roughly $3,000 already because of that long and this short. So we're okay with that. But do we hop in a short immediately? We have a green there. We have 4 reds here. This thing dropped really hard. When you have a big drop like that, it's best not to do anything. You're better off to wait. And it dropped more. Now we got a red, but it's starting to come back up. Do we hop in the short here? Probably not, because this will probably retrace back to a red candle. Not always, but probably. So it dropped and come back up. So what do we do here? It's back up to the candles. We're 5 red. That's a good place to hop in a short, wouldn't you think? Or would you?
think I would.
I think I would too. And then put your stop right above there. Okay. So now our stop, we're going to put it right there. Because if it goes and blows through, we want out. So we're 5 red. There's our green or yellow one. So right now our stop is going to be right here. I think I deleted that. And we're still 5 red. I'm still feeling pretty good about it. Right there. So now we did good. We got our stop above that candle. And now we're up 275. We're feeling pretty good. We got 5 red. That's a good sign to stay in it. Good choice. Now we got a green right there. Now you got to think, this is 5 minutes. You've been watching this thing gradually climb. This didn't just pop up. So right here, you were up 1,060. I'll have to go back and look at the time on this. I don't remember when it actually started. That started at midnight, so it would have been hard to catch that because you're sleeping. But if you're not, I mean, this would have been a long trade. From if you stayed up all night, it'd be worth it. From midnight, that's 3 hours. You could have stayed up and then went to bed, and you would have missed this short, but you would have got the 1620. On this one, if you would have went ahead and stayed up and you're a superhero, then you would have made 1,130. So right there's that one. And then you would have lost 135 on this one right here. But looking at it, it looked like it was going to go, but we were in this consolidation period. So now we've got the 1130, the 1600. Right here would have been 1,060. You wouldn't have got out there though because you had 5 reds. Right now you'd be here. Would you go ahead and get out? It is 9:30 in the morning. 9:30 in the morning Eastern time. I don't like to trade going into open personally. So me personally, I would have been out. I probably would have been out right here. For me. Because I don't like to trade that opening bell because it can go against you. Or I would have left it in there and I would have brought my stop way down here to where if it spiked up, I would at least take my profit there. So if I had, if I just kept on watching it, and then whenever the opening happened, I just go ahead and bring my stop down, just keep on doing it so I can protect that profit. That's what I would do for the 9:30 open. That's the way I trade though. I don't like to open. I hate trading open. It's too volatile. So then you're coming back. We're still 4 red, which is good. Now we're 2 green, 4 red, or 3 red. Now see, our stop would have got us out at the least right there because we're going to be trailing that back. So if we would have been $185 in the hole because we got in a short right there. So that's at 9:15. We probably wouldn't have even taken this trade anyway, being at 9:15. I probably wouldn't. I just usually when it starts getting close to 9:30, I won't even take the trade. But as you can see, this one right here, we have a lot of congestion there. And we're still staying within this zone. We're back up into that zone. So when we come up and tested the bottom of it, and we dropped out, and when we started coming back, that's a good sign. We're going back to the bottom of this zone. So you got to protect your profit. You definitely don't want to give up profit. So now we're 2 green, 3 red. What do you do here? You got stopped out. So would you hop in a long here? Would you hop in a short, or would you stay idle? I'd stay idle.
I don't know what it's going to do yet.
Yeah. So now we're going that back. So now we're 2 green, 3 red. Still stay idle. We're at the top of that zone now. And look at that. See, we're at 9:45 here. So a lot of times it'll sell off and then opening, they will run it up. Or if they run it up in the opening, they'll sell it off. So you got to make that decision. But now you have 4 green. Do you hop in right here or do you wait? You're at 10 o'clock in the morning. We're so far away from this, I would wait.
Yeah, I'd be suspect it would come back down.
And we missed it. Now we're 4 green, 1 red. We just completely missed that trade. I mean, it just shot up. That's the only bad thing is when you're trading into open. I mean, you just don't know what's going to happen. But now we're way up there. Again, you could have tried to, when you saw the 2 green and you'd sold off all night, kind of common sense will tell you if it's sold off all night, it will run up to fill the gap. So that's the choice that you got to make. See, we're running on up. We still got 4 green. Pull them back. Personally, I like to see the price come back into the candles. That's what I like to see. But now you're at 10:30. You're thinking, you've been sitting here for an hour and missed that whole thing. And that trade would have been, let's say you played it as it was coming up and you had these 2 green there. If you play that to the top, there's the 1835 that you could have had. Now you got to remember, this didn't just go straight up. This has been doing this all the way up. So let's look at a regular candle. See how the candles are? Every 5 minutes, your price went from here to here, all the way up through there. So when you're looking at this with a regular candle, maybe you have it on a different chart, and just watch your candles. You can see your double bottom here. It's kind of coming up. You can look at those and tell what it's going to do. Long wick, short wick. That's buyers pushing it up. This right here, the sellers pushed it down. Buyers pushed it up, and then it opened right here, and then it shot up. So when you're looking at those candles compared to these and with your bars, it really gives you good confirmation about where you're going. But if you just watch your line tool, you're seeing that it's coming up. And as this thing goes up, this line will just like flicker back and forth all the way. It don't just stand right there. It moves with the price. So it's like your finger, if you were just like tapping on the furniture, that's what it does all the way up through here. It's up and down the tip of it. So then we have all of our candles. So say we missed that. We wouldn't want to hop in it right here because it's so far up it could easily pull back on us. So we're going to wait on this pullback to come back into the candles. There we go. We start pulling back into it. Now it's coming up. Would you get in right here? I don't think I would. So now I would be, thinking maybe get in it. We're making lower highs, but we're back into the candles. Let's look at them. We still have a lot of bottom wicks on it, and we have big wicks here, but it's actually curling over, right? So with it curling over, maybe I wait one more time. Look at these reds down here. We got 3 reds and 2 green. That's a good indication to what? Not get in it. So now let's see what happens. So we bounce in it. We still got our 3 reds. Right there, you're starting to feel a little better, but you're only 2 green at this time. You're 3 red. That doesn't mean short because of what it's doing, but I don't think I'd get in. So here we go. Now we're 2 red, 3 green. I'm looking more of a long possibly here. So what would you do? If you did get in down here, the least you would do is probably right there, because when this is starting to come down and then it comes up and then it starts coming down again, it's a lower high. So there's 1285. That's the least that I would have done. So now let's watch it. Right now I would not be getting in along because we have this curl of this indicator. So now it's popped up. We got 3 green, 2 red. I'd want to see this thing kind of come up maybe a little more and see what it does. I'd want one more bar. So right there, it looks pretty good to me. I would be thinking about getting in long here. So let's just take one of these lines and put it right there. So that's what we're saying we would have probably got in there, because we've got 3 red or 2 red and 3 green. Now we're thinking, I shouldn't have got in. I should have waited. Now we got 3 green here, so we got 4 green total. So I'm feeling pretty comfortable. My stop is going to be right there, right below that wick. Now I'm thinking, well, maybe not. So now we got another red candle in the 1 minute. So we've got 3 green and 2 red. I'm still in it. Boom, I got stopped out right there. That's the problem with trying to trade. Like if you got in right here, and let's just say you followed the candle only, and let's say that turned green, and you got in right there, and then you could have made 985 right there. And once that started pulling back, you're still at $500. Let's just say it went up and it started pulling back, and you didn't feel comfortable with it. You got out there. There's somewhere between $500 and $1,000 you could have made. If you come down and it didn't break here and it come down, then there's 430. That's if you played right when the candle turned green. You still made money. You can overthink this a lot. I mean, you can just play red to green and still come out good. But if you start watching this line tool and the bars together, it's really not much to look at. You're just looking at a line. You know, you want to see where that line is, which is price. You want to see the color of this bar. You want to see where the wicks are. And then you come down here and just see, is the majority red or the majority green? If you follow the majority. So when you follow the majority, you're going to do a lot better. So let's see where else it goes here. We come down. Now we're all 4 red. We're 1 green. We did get stopped out. Okay. If we didn't play this right here, we already got stopped out. So if we would have got stopped out there, so we would have made $60. But I don't think you would have waited. If you were up $9.85, you wouldn't have waited to $60. You would have taken profit somewhere along through here somewhere. Yeah, maybe you took it all the way up there. Maybe it went up and you hit 800 and you said, hey, that's a good payday. So you took it. Maybe not. Maybe you did take the 60. But now, would you get in a short? You got 4 reds, 1 green.
I would wait 1 more bar.
Okay. Now you got 5 red.
Go for it. Short.
So you go in a short right here.
Yes.
Okay. Good choice.
I was due 1. Oh, man.
So you just keep on watching it. So you got a green on the 3 minute now. Now you're back to 5 red. And your stop is right here. Now remember where your stop is. Your stop is right there. So you got in right here. Still 5 red. Oh, finally back to break even. I'm happy now. Now I'm making money. Yeah. I'm going to take it before I get back to losing again. Just kidding. So you're still 5 red. You just keep on following it. You had a green one right there. It's pulling back a little bit. Big drop. Our stop is now right here. So on this one, let's just change this one. Let's say we got in right there. Right now, you are up $1,140. 5 red. You stay in, right?
Right.
Stay in. Stay in. Stay in. Stay in. See how our wicks are disappearing now? There's no wicks. Now we're up 1725. And this is from 11:40 in the morning until, might as well call it 2 hours. Hour and 50 minutes right there. Now you're coming back up. Yeah, maybe you took it. You saw this zone that you had drawn out. Maybe you went ahead and took profit right there because you are way away from this up here. When you come way away, it'll usually gravitate back to it before it will drop again. You're thinking if you took the profit there, oh man, look at that. You can always get back in. But if you just played the bars, you got five red altogether. So that's a good sign to stay in.
Yeah, no top wick, long bodies.
Right. You're getting it. Now if you'd have stayed in, there's $3,950. That is from, this must be today because I got a lot of stuff drawn in here. That's $3,950. Still coming down. You're coming back up to it. You got one green. What would you do? You are up $3,730.
I might cash out and go to Chili's.
It's 3 o'clock in the afternoon.
It's okay. Oh yeah, 3 get out.
I was just saying it's 3 o'clock in the afternoon, so you know what time.
Yeah.
Personally, I mean, if I'm down here, you were up $4,700. Why would you not take that money?
Yeah, that's what I said. Get out.
If you're trading 4 contracts, I mean that's 20 grand. Think about that. Or that's 20 grand. So right there, maybe maybe during this time frame, you've been bringing your stop down here. Maybe you went ahead and put it on the bottom because you were, so far into it. Maybe you put it on the bottom. If you did, you would have stopped out there. I mean, the way this is going sideways now, that's consolidation. I mean, and now you're at 345. There's 350. You definitely would have got stopped out there. So let's say that you would have got stopped out on the bottom there. That's $3,500. And right there's $3,000. Still good winners. But you'd had $4,700 down here. Of course, you probably wouldn't have got that very bottom. You probably would have, got it as it started pulling back around 4 grand. But still, this indicator, if you use it properly, will make you a lot of money. When you start using the bars with it, some people bought the bars, some people never. But when you use the bars with it, I think that it complements each other a lot because you're seeing what color these bars here are right here. So if I switch this over to a 1 minute, right here, these would all be green. And a 15, the 30, and the 3 minute would all be red. Now they'd look different, but they'd be that color. So we come back, there's a green one. It is 4:05 Eastern time. What do? You quit on the last trade because you don't want to trade after 4.
Mm-hmm.
It usually just doesn't move. And look right here. So there's 4:30. I mean, it just went sideways. It'd be a waste of your time.
Right.
So now let's look at where we are right now. This is live. Excuse me. So we opened at, I forgot to turn my bots on. We opened right here. So our price is going up. If we open right there, we've got 3 reds, 2 greens, and now we've got 3 greens. Maybe we get in. We sold off all day. So maybe we go ahead and get in a long right here. So if I come back, and right there was before hours. We'd have to get in after this. If we're looking at this, maybe right there we would get in because we're looking at 3 greens off of this. So we come in, and our max drawdown was $145. We made bank today, so we don't care. So $145. Then we're up $760. It is $725 there. Right now, you're up $1,095. We should have been doing this instead of making a video. So we're up $1,095, and we're still 3 green. So today we made, if we stayed up all night and we're superheroes, we would have lost $135 there. we would have made 1130. So let's do a calculator. So we got 1620, and then we got 1130, and then we got minus 135, and then we made which one of these were right? That one we were estimating this one. So this one right here is that. And delete that one. This one right here was right toward the end of the day. That was 410. No, that was we wouldn't have taken that one, and we would be in this one. So we're 26.95 plus the 39.40, and then plus 1,095, $7,650. If we stayed up all night, which we would not have done, but if we stayed up all night, that's where we'd be right now. One
Not
contract.
bad.
That's only one. So round number, call it $8,000. If let's call it 7,000. Let's round it down. So you missed some of the money in there. So you got $7,000. If you traded 4 contracts, there's $28,000 you could have made. Welcome to my world. But I wouldn't have stayed up all night.
I would for 28,000.
Well, if I knew I was going to make 28,000 if I stayed up, I would. So let's recap this. Let's go back. I'm going to ask some questions. And Jim, are you back? I unmuted you.
Hey, yeah.
Okay, good. You had a lot of background noise. I don't know what it was, so I had to mute you.
Well, I'm sorry. I got a phone call in the process, and it was my sister. I hadn't talked to her in a while, so.
Oh, that's okay.
Anyway.
Yeah, it's fine. All right, so we're going to recap this. Should the wicks be on the bottom? Let's just talk along. Should the wicks be on the bottom or the top?
The top.
Right. They should be no wicks on the bottom, right?
Correct.
All right, and then on a short, if we go to a short over here, should the wicks be on the top?
No.
No.
Okay. Should they be on the bottom?
Yes.
Okay. So no wicks on the top means a good short. How many bars, like red, before we would want to go in a short? If we have 4 bars down here, and we have this one counted as 1, so that's 5. How many bars would be short? How many colored bars?
Sorry. 3 of 5.
Right. You want the majority, which is going to be 3. Now, in the settings in the back, you can change this back here to where you can just have 3 bars if you want. You don't have to have all 4. I like all 4. I think it's better. And I leave these alone up here. I think you're better off to leave them for the default setting. You can change these around. This is the moving average length and stuff. I personally like the default settings the best, but you can play with that and find what works best for you. To give you an idea of the difference, if you watch these bars up here, I'm going to change this to, say, a 40. Change it again here. It's not changing them right now, so let me go back to a 55. So length close, put it at 10. There you can see the change of it. It'll make these bars closer to the price. So if you play with these and put them up against your price, the bigger the bar this is, and the further down it stays with the price better. The problem with it is if you do that, then you don't see the wick. If you watch the wick, it will stay with the price. Your wick will. And if you're playing with the stop off the bottom, you can see here where you would have got stopped out a lot and then it come on down. But the best thing to do, because it's too hard to explain it, is when you start playing with these right here and just watch your candle of it, then you can see how it will work for you. I like the default settings. I put these defaults in, and as soon as you open it up, that's what they are. So that's what I did. So you have the majority of the color wins. If this is red and you have 3 green, what would you do?
What, say it again? Red and 3 green?
Yeah, if this is red and you had another red and you had 3 greens, what would you do?
Didn't you say at some point that the bars are almost stronger than the indicator?
I sure did. I sure did. But if you have 2 and 3, that's not enough. Well, if you had 4 green, all 4 of these were green, but this one was red, what would you do?
I think I'd go green.
If I was in the trade, I would be thinking really hard about getting out of it.
Exactly. So you wouldn't want to be in the trade, but you'd also be thinking about possibly going long.
Yeah, sorry. I wasn't thinking about being in the trade already.
Yeah, well, I didn't say that, but that's true. So right here, you have this big old drop come down. I mean, this is where price, it come all the way down here, and then it come back up. If you get in this short right up here, and this keeps on going all the way down to here, and then it starts reversing up here, are you going to wait for it to come up here?
No.
You've got all red. You got 5 red. You got 4 here and 1 up here.
I think I'd get out still.
I do
Take
too.
the money and run.
You don't want to be greedy. If it dropped this far away from the candle, remember earlier when I said it will gravitate back to it before it will drop again? So why not just take that profit when that price line comes way down here away from it? Take that profit down here, or maybe it's even right here. Maybe you don't even get all the way to the bottom. And you take that profit, and then when that starts coming back up, and you come up here to the candle, you can see the green. Maybe you hop in it when it's all red again right here. Or maybe you hop in it right there. That's still a good entry. Even right here is a good entry. Any of this right in here is a good entry. Once you come up to it, you hop in it, because if you look down, this is all, it's actually all red right here, according to this. So you've got 5 red, and then it don't turn green until you come right over here. So any of this area right here would be a good place to go ahead and hop back in the short. But when you see the big sell-off like that, I mean, this is opening. This is 9:30. So we're coming up through there. This is kind of consolidating a little bit. I mean, if we looked at this right here, this is what we'd be looking at. We'd see 2 red. We're seeing it come down. The price is going up. We double topped right here on the price line. This is coming down. Our wick is getting big on the bottom and the top. When we get a wick on the bottom of the green, that's a good indication we're going to drop. I don't trade opening, but if you all do, this would be a good indication that maybe you put in a short here, and you go ahead and put your stop at the top of that green candle. And, it's a gamble trade, but in this case, it paid off. Right there's, where you'd be. You wouldn't have got stopped out, and then it dropped. And when it dropped, you can go ahead and move your stop down here if you wanted, or even there. When you play this together, you're going to make a lot more money other than just going green-red.
How long after opening bell do you feel? Sorry.
No, go ahead.
How long after opening bell do you feel comfortable to start getting in?
One of 2 things. Usually about 15 to 10, or when I start seeing the candles start behaving to where they're not so huge with the big wicks. So when I see the candles start coming back to normal, or mainly that, or sometimes it might be 10 o'clock before I jump back in. And sometimes I will trade the opening bell. If I see that the history of it, like this right here, looks like it's pretty well going up. But look what happened. We dropped huge. here's something else I want to show you. Sometimes your candles will get like this. This is volatility. When you have a real tight knit candle, that is a good trend. When you see this, just stay out of it. Unless you got into it up here somewhere. When you start seeing all this, that's bad. See how thick that is? That's consolidation. And if you look at this without looking at that bar, if you look at it this way, right there is all consolidation. That's range right there. And it started from, let's see here, from about right there to, I guess, really about right here. So it stopped at 135. It started at 10:05. So from 10 to 1, there was nothing but range. You know, we had that big drop, and then it just went sideways. And when you have a big drop or a big rage, you've always got that consolidation where everybody is, you know, picking out their, like on this one, this right here is where they covered their shorts right here. That's what made that go up. All the people that shorted at the top, they picked it up right here. So looking at a large time frame chart is a lot of times better. When you get into a 5-minute, your drawdown is going to be a lot larger. But if you can handle the drawdown, then you can probably make more money. The 5 minutes are really good chart to trade off on this one right here. And as long as you have the bars down here with having like this has the 1 minute, 3 minute, 15, and 30. And you can even tighten that up. Maybe you do a 1, 3, 5, or you have the 5 up there. You do a 1, 3, and then maybe you do a 10 minute and maybe a 15 minute. Maybe you don't do a 30. Yeah, 30 is kind of big time frame, and you can see it didn't really change a whole lot. But yeah, you can tighten those time frames up if you want.
But y'all been having luck with the 144 tick?
I like the 144, especially with SpyBot. I've made a lot of money with SpyBot Super Trend. And look at this right here. You know, if you looked at this one and you were trading this one, you would go ahead and go back to a different tick. So this one, you would go to, if you're doing a 144, you do say a 100. And actually, let's see, you could do a 75 even. So if you did a 75 and you did a 100 and you do a 200 and maybe you do a 300. You could even do a 400. I mean, you pick what you want. But if you do that, you can see that all this is red. So let's make this where we can see it real big. And let's do the line color. So the 144 says to get it a short here. You look straight down, you've got 4 red, 1 green, right? And then your next candle, you've got 4 red, 1 green. Your next candle, you've got 5 red. So let's look at this on a larger screen. And I want to show you something. This is why I trade the smaller time frames. I don't like drawdown. I hate it. Because I trade large contracts. So when you're trading, you know, sometimes I'll trade 10 contracts on NQ. That's $10,000. I can't afford to have a drawdown. See, if you got 10 contracts, that's going to be $200 a point. So if you're 10 points drawdown, you're down $2,000. Well, I'll be honest with you, that I just can't stomach it. So I use a smaller time frame, and that's why I trade the way I trade. But I'm not looking to get that whole day run. I'm looking to go in there and just scalp it all day. So this one, let's say that that one turned red, so we hop in. It's actually probably right there. So my stop is going to be right here. That's $60. A 5-minute time frame, that's going to be about $200. So I'm looking, if I do 4 contracts, I'm looking at $800 drawdown compared to $240 drawdown. I can afford $240 drawdown if I'm wrong, because we're not always right. So now let's go ahead and look at our trade of where we would be. So when we come through, say we stay in this the whole time. it's easier to stay in a contract, like right there. See, from right here is going to be 360. Right there is 230. It's easy to stomach $100 difference over $1,000 difference on a 5-minute. So, we're all red down here. I'm looking to see a red. And we don't get our green till here. So maybe I just go ahead and get out where I stop out right above that wick. That's $550 I made. That's a pretty good day, isn't it? I mean, if you just made $550 per contract, you do 4 contracts, there's $2,200. So now let's look at this one. So we're going to take that out. Our entry would have been a lot better than the 5-minute. The 5-minute, our entry was up here. But now we can get in down here. So this is the end of the day. That's 405. I did trade this, by the way. I traded long on this. So let's say you're looking at this one, you wouldn't get in because you've got too much red. And it comes over, that's red, and then it turns green. You got 3 green. You're seeing that it's kind of going up. Maybe you hop in it, right here under, which I did. You hop in right there because you come down and it's starting to come up. You've got your green. So you're really kind of 3 green, even though it's a red there. And what you do is you just put your stop just down below it. Just go down a little bit. So if you put your stop, see right there is 65. I would usually do a 10-point stop. So right there is about 10 points. So you can put your stop down here if you wanted. In this particular case, I would be closer. So you got a $60 per contract stop on it. You don't have to come down that far. You could put it down to say right there. That's $120 per contract. I can stomach that. So if I do that, look at my gain that I'm looking for. So this comes up and it goes right up here to, see, I would be getting out. I usually trade no later than 445 of the margin. So let's say I get out there. There's $370. I went long. I took one trade, $370 per contract, and I did make this trade. I don't remember the exact dollar, but I made that trade. And I traded on the 144. Just like you see it right here is how I traded. Now, I'm going to take a break because I'm not going to trade from here to open. Now, if I had not been doing this video, I would have been in all these trades. But, I did the video. So I did trade some through here, some longs. I think I traded until maybe 30 minutes in here. I just did some quick scalps, and I had some longs. The reason I had longs is because of this. So let's look through here. We've got all green here, okay? So let's say that we go ahead and take the long there. If we took a long at open, say, it was popped up, it sold off, come down here, and let's just say we took a long there. And if we did, we'd put our stop here, and we'd keep on coming. We've got stopped out there, probably about broke even. And then right here, would we go short? No, because look back here. This has been going. I mean, look at it this way. We have this right here, and then we're going up. We have a little pullback. That is a sign that it's probably going to keep going up. And right here, we have all green. So maybe we just go ahead and, when we got in, maybe we moved our stop down to here or whichever. We would have got stopped out either way. And then we're kind of watching the price action of it. It's coming up. And then right there, we have all green. So maybe we hop in right there. So we come over. We hop in there maybe. Or maybe we wait on the pullback. So let's say we hop in there. If we do, our stop is going to be right here at the bottom of this green. And then as it goes up, we're going to keep on following this on up. And we're going to get stopped out right there. So on this one, let's say that we got in right there. And then we stopped out right there. There's $515 per contract. That's one trade. You can do this trade in the evening and be done. So then you come back in and then you're watching it. You got stopped out there. You're not going to enter a short here, even though it turned red, because you have a sea of green down here. And then you come in here. Are you going to take a short here? Maybe you do. Maybe you don't. we have a bull run, so more than likely I'm not going to. And then when this drops, I'm gonna say, shoot, I should have got in there, but I didn't. So you kind of wait on it, and then right here you're thinking, man, I should have got in that because we've got 3 red and 1, so that's 4 red. I don't think I would have taken this short though, because all day it's sold off because it's probably going to go up all day. So I would be looking at taking longs all day, all evening. And then let's say that we got in. If we're watching our green down at the bottom, right there is, we've got 4 green right there. I feel pretty comfortable taking that one. Right now, you would be right there. So you'd be at 450. Our stop, when we got in, we would be chasing that stop all the way up through there. And we would have got out. We would have stopped out there if we didn't take profit up there. There's $410. So tonight, you could have made $925 following the bars and the indicator along with the price. That's tonight. That's real money. I mean, this is everything that I showed you guys in the trading will fit these 2 trades right here. So that's $51.50 micro and $41 micro. So you're up what, $92.50 for the night on 1 micro. Make sense?
It's getting better.
So now, hey, I've got a question about your ATM strategy that you have over on the right hand side. Is that 16 points, 16 ticks profit and 16 ticks stop?
Yes, but I wouldn't trade that on this one. I would be trading the 2040. I do a 5-point stop and a 10-point profit. But the only reason I have that is I want something to pop up on the screen, and then I move them as soon as I do it. So this is a semi.
That's what I was going to ask you about. So that's kind of like your
initial, right there it popped up. See it?
Yeah.
So let's make this bigger. So as soon as I pop in the price, what I'm going to be doing is I'm going to be putting my stop at the bottom of this one. And then I'm going to find what my target is. So I think it's going to go to the zone. So I'm going to put it right there. So the 2040 is not, I'm looking for 2040 only. It's just a place for it to pop up that's far enough away from the stop or the price so that I can move it where I want. And this one would actually be 1 tick underneath that bar. Because sometimes it'll come down to it and then pop up. Now let's look at a candle. See how the candles are going? We come down, we come back up. But my stop is right there underneath the main candle, the profit finder. So right now, this is up $40 just on 1 contract. And it's going to take a while because it's the evening, but my target would be here, but that don't mean that I would keep it there. So as this one comes up, if we take that out and just go back to the line so we can see it better. So my stop is going to be right underneath that. And then when this one makes a new candle, if it goes higher, I'll bring my stop up. And I'll just keep on doing that. But I would not have entered a trade right there. I mean, this is just showing you.
Right. Okay.
So I have a 2040. As you can see, I've got a bunch of different ones over here. And it just depends on what I'm doing. Like on ES, I'll usually use the 1616. And I've got this one. This is a... this one actually puts 2 targets in there. So if I wanted to have 2 targets, then I can have that. And then I can sell one here and sell one there. And then I can have both my stops right there. And I'll tell you what, I'll do this for you real quick. You go to custom. And right here is where you put how many contracts. If you're just going to have 1 stop and 1 target, just make it a 1. And I'll explain in a minute. And then you leave that on ticks. And then your stop loss, if you're going to be doing, say you want to, just so I can have a different one, say a 30-point stop or 30-tick stop, which is going to be 7.5 points on NQ. And then say we want to do a 60-tick and make it, what is that? So not so let's do something else. 10, 20. We'll do 80. That's a 20-point profit. Then we go to save template, and what we're going to do is we're going to save this and call it what we did there, so we know what it is. So we're going to do a 80 profit target and a 30 stop loss, and that's how I'm marking PT and SL. So now we click OK, and let's click close out of this, and now we've got this 80 point or 80 profit target, 30 stop loss. Always make them by the tick because you don't know what you're going to trade. You might trade gold. If you trade gold, there's 10 ticks in a point. If you put it as 1 point, then gold it's not going to work right. You'd always want to use the ticks. So this one looks like we're kind of coming down. I wouldn't take a short here by no means, but let's just say we take a short. Do this just to make it take it. So now we've got our stop up here and we've got our profit target here. So what we do immediately is bring it down to this one, and then we'd set this one at wherever we think it's going to go, which is here. It may not get here, and that don't mean you can't close it out here. When it comes down and you see the hesitation, close it out. Because when you see hesitation, it's getting ready to pull back. 9 times out of 10, it will pull back. When you see it dropping and then it just stops and holds right there, just take your profit. Because it will probably pull back, and it may pull back a little and then just drop real hard. You can always get back in. You can't lose taking profit every trade. You can't lose. So right now, our price is here. We've got a red bar. We've got a red. This one's flashing red. You see that? There it is. Maybe it is a good short. So this one right here, actually let's do this, it shows better. This one right here, we're up $50 on it, sim account, but we're up $50, $60 now. Who's to say we can't just go ahead and close it out and take the money? You know, we've got 2 bars here, so we got 3 red. That's a good sign that it's going to keep on selling off. I would not have gotten in a short here because the bar, we only had 2 red bars. I feel better about a short on this one right here at this time than I would any of these 2. That's why your bars are very important. If I was, you know, I mean, like with the bars, you don't even have to have this one on there. You can just trade your line. You can trade candles. You trade anything you want and have your bars down here that will kind of go along with what you think here. You can throw the mover on here. So you've got the mover. The mover's turned red. So you could use that. It's kind of like the red here. So when this is red and you line up with 2 other red ones, then maybe you use that mover red along with these reds and then trade it. Maybe you go to 100 tick and 120 tick, or maybe you trade a 170. You trade a 170 and then you raise these to 100 and a 144. So you've got your 100 right there. It's red. Your mover's red, and your mover's on, mine's on the 13 WMA. That's what I'm trading with. That's what I always use. It's a weighted moving average. And so if I've got my red on that, maybe I don't even have this indicator on there. So let's take that and turn it off. So I'm trading my mover. I've got my candles I'm looking at, or maybe I have a line chart. I'd rather trade candles because I like candles. And then I'm looking down here to see what it's doing. So now we're fluctuating red to red. I mean, you could trade the bars with anything. It doesn't matter. And then you have your profit finder is, in my opinion, a really good indicator because, let's see, where is it? There it is. And then let's take that one off so we don't confuse. So we're looking at this, we're seeing the red candles, which is great, but this up here is still, the 170 is still green. A 170 is going to take longer to turn than a 144. Oh, dude, he his power just went out of his house. He lost me. Just us, Jim. So
Okay.
So this one, we got in a short up there, and we based it on the, we had the red on the 144, and let's turn this back so you can see it better. So you had the red right there, but it turned green again, but we got red there. I personally would not have taken a short there. It worked out, but I would not have gone short. I wouldn't have gone long either. It would have been a place that I would not have done anything. But now we've got 3 reds. We got red here and 2 reds here. And we're up $140 on it. So it was
this is what I've been looking for. So just a good, so the 144, I really like it.
I love it. And you saw how it did on SpyBot, Super Trend.
Oh yeah, and I'm still running SpyBot 144 tonight, and I'm up a solid 756 after commissions, and I've got another 165 in play right now. So it's
Did you run
I mean, it
live
hasn't
tonight?
lost yet tonight. It's made 2 trades, 2 for 2.
Yeah, did you trade live?
No, I'm still trying to figure it out, but I'm believing in this 144 strategy and settings a lot because of what you've said and because of my personal experience with it so far. So it's running pretty good right now.
Yeah, it's doing real well. Now, it's not to say that it won't have a losing trade, because it will. And it's not to say
I'm
that
not looking for it to never lose a trade. I'm just looking for it to end up green at the end of a week,
Right. Well, at the end of the day, that's what I want. So, I haven't lost money on it yet. Now, one thing.
How long have you been running the 144 bot?
Sporadic for a month.
Okay.
I haven't run it every day. I'm not going to say I have, because sometimes I forget. It's not on right now because I forgot to turn it on. So your $700, is that with 4 contracts?
Yes.
So I've missed out on $700 doing this. I forgot about it. I got so much going on. I'm trying to do the live training. I'm trying to build bots, indicators. Plus, I've got 3 other businesses that I own. So, my mind's not always there.
I mean, hell, just the time you spent with us tonight is a lot. I mean, this is going on 2 hours.
Yeah. I did not last night. It was the night before. I did 4 hours training live with the group in Discord, and then I did a 1 hour conference call with someone about a bot building procedure charts, and then I did 5 hours live training with someone that night, and then yesterday we did the one on the 2-step. That was a couple hours I did on that, and then a couple hours tonight. But I enjoy it. I like it. I want people to learn. I want people to know how to trade. I don't want you to buy something and then not know how to use it. And this video, I'm going to go ahead and put in the courses so it can be watched. So anybody else that buys the course later, they'll be able to watch it. It's a long video, and some chit chat, but that's fine.
Yeah, a little chit chat's always good.
So right now, what would you do? You're $120. The price is staying about there. You got 3 green and you got 2 red. What would you do?
Right now, we just kind of hold for the candle. I'm watching the yellow line as well. Price action, and I'm just evaluating what might happen, but here you go with a little bit of downturn on the price action. So I'm watching that, and
your bars are
I would-
changing right here. They keep flickering red.
right, and you're already in a short, is what you're saying, right?
Yeah, already in a short.
Yeah.
My stop's right there.
Yeah, I would hang on to this a little bit. It's going to turn, I think.
Yeah, I think I've only
Now,
got
now you're four red, one green, flashing four at least.
3 red. 1 here and 2 down here.
Yeah, it was flashing a fourth red a minute ago.
Oh, was it?
Yeah.
So the 200 tick must be trying to turn. And
Yeah.
you can change these to whatever you want. Maybe you want a Hashiaski down there or something. So that's kind of what these are. They're not, but they're different than that, but they're similar. It's more like a hammer. Is more like what it is. Which is, they're all kind of the same, except these work off of a lot more than the Hashiaski. So now we're up $145. Maybe you add a second contract. So maybe you go ahead and you add another one there. So now you're at 2. Yeah, maybe you feel pretty comfortable since you're seeing this third one flash down here. So maybe you hop in 2, and you start off with 1, and then as you go, you add in some others. You don't have to go in 4, 5, 10 at one time. You might be wrong.
Exactly.
So I believe in staging the contracts. I mean, a lot of times, some people watch me live trade, and sometimes I'll just jump in 1, and then before it's over, I'll have 10 contracts in it. I was traded yesterday. I traded 12 NQ contracts because I was out on the beach all day, and I come in, and it was the last 15 minutes of the day, and I saw setups, and I jumped in large on it, and I ended up making $3,000 in about 15 minutes because I went in large. So now we're up 225 by adding in the second contract. So when you can watch this price line, you can feel a little more comfortable about what these are doing. And now you've got 4 red. Maybe you add another one. I missed it. See if it'll come up and get it.
So the NQ 144 bot just triggered a sell. So now I'm up $1,122 on simulation.
Yeah. It works, man. Put it on micros. That way you can stomach it and run it while you're there. If you're watching it, you won't feel so bad about it. So now we're
that's really been my issue though, is I can't watch it all day. I'm in and out of meetings all day, working, and a full-time job and all. I'd love to get away from it. I just can't do it yet. So.
But you could have run that tonight as you watched it. You've been watching it all night.
Oh yeah, I've been watching it since I turned it on at 5:30.
So if you were running micros, you would be up $117 or so on 4 micros.
Yeah.
That's free money. So that one I added a third contract. It's up 200. It was up more, but we're still profitable in there. We've got 3 down here. We've got the 1 up here. And our stop, we're going to bring it down to here. But, where this is, I mean, you would want to get in a little bit better up in here as far as adding the contracts. Because once you start seeing it come down, you can add them. I usually don't add this far down, but that's just to show you. But you can add as you go. I would already be in it, probably 8 or 9 contracts, 8 to 10 contracts. I'd already been in it. And when I saw this starting to pull back, I might have just hopped out. We've got 3 green down here, and now we've got 2 red.
Yeah.
But our stop, we got to keep on moving it. Every time we get a new candle, we drop our stop down.
Yeah, that's a good strategy. I like that a lot. And I like the idea that you had a minute ago of adding the mover in, with that WMA set at 13. I like that a lot. It kind of gives you a little bit of an early signal, as to what's going on.
Right. Yeah, you can run it and not even really trade by it. You can see right here that it's already telling you to short. Or at least get out of the trade, because when that turns red,
that's what I'm seeing it as, is get out of a trade, and then when you have your yellow line that consistently stays below your mover indicator, that's a good indication of a good short. And I've always liked the idea of letting price action get below your indicator that you're looking at, in this case mover and the bars, and then wait for that drop, and then pull back to your, in this case, your mover indicator, let it pull back to its line, and then take a trade at the line as often as you can anyway.
So this one, if you would have taken this trade, and let's say you saw the mover turning, and when that turned, that you're over top of it, and you've got two greens here, you could use the mover for the third green. And then, when this one turned green, it's confirmation, or you could just wait for that one, because usually it'll pull back on it. And then you could hop in, just kind of watch your price with the mover and the profit maker, and then use the mover for your exit.
Yeah. I
That
like
way
that a
you're not
lot.
waiting for it to come back. That's actually a really good idea. I never thought about doing. That's why we have these chats. And that one right
Yeah,
here.
everyone's got a different idea about, how to do things.
Yeah, and now we've got 4 red, and 1 green. So I feel good about, maybe you add another one. So you go ahead and add a 4th one there, because our red is coming in. We're dropping down. We're starting to see our bodies get bigger here. So let's make it bigger so you can see it. See how the body's bigger here than there? And it dropped. So maybe, when you start seeing that, then you go ahead and add you another contract to it. And if that's too far away from you, and you can watch the price, maybe you bring your stop down there, or maybe just bring it to the bottom instead.
Yeah.
Yeah, I like the bottom better than bringing it down here, unless it's like a big drop. Then, like on today, on something like this, how it just dropped real hard.
Yeah.
Yeah, maybe you go ahead and bring it down below that, that bar. Of course, you can't really see it on that one, but there's that one. It don't really show it on the 144, but on the 5-minute, it showed that how it dropped really hard.
But this indicator that you've created is kind of synchronizes with my thought process, and that if you could just find a good indicator and trade just the indicator, this might be it, instead of trading the price action, because price action goes, so up and down so much, but averages out to something nice and smooth like this. What we're talking about here is allowing your mindset to get wrapped around an indicator and a smoothing out process that kind of helps you make better decisions, I think.
Yeah, I think it does too. And when you have to look at so much stuff, it gets overwhelming, and you can't make a decision quick enough. Where this one, you've got green and green, and then you just watch your wicks on the bottom. If your wicks are on the bottom, then you don't like it on the long. When you start seeing the wicks come back, like right there's your first one. But if you got your mover on there, maybe use your mover for your exit. Adding the mover to this strategy is not that complex.
Yeah, I like it a lot. It really helps clarify things in that regard.
I think seeing the candles on there really take away from it. It distracts you. If you just have this price line, you just need to know where price is.
Yeah, I agree.
And this one, if you double click it, you can change everything here. If you don't want that so bright, you can turn it down to there. and now it's smaller. You don't have to have it huge. So now it, it kind of takes away, and then the mover, we can even. No, I was thinking that we could turn that down, but I guess you can't. I was thinking the opacity was there, but it's not. But you could use that mover from the exit, because that would get you out a lot quicker here than all the way down. Well, actually, it kept you in the trade though. But you could have got back in the trade. You don't have to get out at when the collar changes.
Yeah, you can change that mover line thickness at the very, very bottom.
Change the mover what?
The line weight or the line thickness.
Yeah.
At the very, very bottom.
Oh, do you mean the mover?
Yeah, the mover, you can change. There you go. I changed mine to a 2, and I've got the line price action at a 2 so that they're balanced.
That one we already changed it to. There you go. And you can make this any color you want, even the mover.
Yeah, I changed mine to green and red, just what matches the candles.
We can do that. Make it look like yours.
I mean, one thing I'm looking at too is you could trade the mover and the yellow line price action with, well, maybe not every case, but you could trade the mover crossing, or the price action crossing above and below the mover.
Yeah, that's the way it works.
I like that a lot too.
Yeah, just using the line instead of the candles.
Yeah.
Yeah, you can do it that way. But see how it flickers?
Yeah.
This will just kind of flicker back and forth, and then all of a sudden, right there's your pivot. There's your pivot here. And then as soon as we get the next bar, then it will just stay wherever it is. You see right now, our stop, we would have already gotten stopped at, let's say it's a 5 minute, I'm on the wrong one. So our stop would actually be 1 tick down there. So if we're running the bottom, it'd be there.
Yeah, the way this price action looks like you're consolidating a little bit. So I don't know. Depending upon what your thought process is, you may want to take your 155 and end the trade. I don't know.
Well, we pulled back and then we're coming down. But if we look back at the, if we look at the line, you can see the consolidation.
Yeah.
Yeah. I would have never entered this trade. That's just not the trade I would have entered because we had too much green. So this one right here, I would have never been in. Because if you have a sea of green, it's a bullish movement. It's just a little pullback to run again.
True.
But, as it's coming down, you don't just jump in 4 contracts up here necessarily. You can jump in 1, and then when you feel a little better, jump in 2nd, and keep on going, and just stage them in. So right there is where our stop would be. So if it goes up and hits it, we're out. Our stop normally would be at the top, but when we're trading like this, we want to keep it tighter, so we run off the bottom. But see, now we got 3 green and 2 red, so that's a good sign that it's going to go ahead and go bullish.
Yeah.
So that's the way this one works. Have you got any questions about it? I mean, did this help you?
Yes, absolutely. Talking through this helped me a lot. Going through the different scenarios. So this is to me, a great manual trader. I think I might start using this live tomorrow, maybe a little bit tonight before I go to bed.
And remember, the bars is what we really count on. Just remember that. So I don't want to talk about it right now, but I'll still do what I said.
Okay. Well, I'll keep that in mind. I appreciate it a bunch.
Yeah, just send me a message and I'll take care of it. Well,
Okay.
I'm gonna go ahead and end this stream now.